So what would be the benefit of purchasing that if there's no cash flow?
So he's listed on the market for 421, right? Do you feel like it's worth 421?
No.
How much do you feel like it's worth? 400? So let's just say we'll give him $400,000 for it, and then we'll give him 10% down. 10% down will be $40,000. Okay, so we're gonna give him list price at 400,000, or we're gonna give him $400,000, and then after the $40,000 down payment, we're gonna ask him to sell or finance us 360,000, and then we'll give them 4%. You know what the market rent is? Okay, so the market rent around the area is about 1,800. So if that is the case, right? Market rent is 1,800. So now we have to structure the deal where it's gonna make sense for us. So how do we do that? So we know that the market rent is 1,800. So there are principal, interest, taxes, and insurance payments. We're gonna want to still cash flow about like $300, $400. Okay. If I do 360 at 4% amortized over 30 years with a 10-year balloon, and I do interest only payments, my payments, he'll get $1,200 in his pocket every month. And that's just interest only payments, right? And then in the next 10 years, he'll make a total of 144,000 of interest only payments. And then I'll cash him out the rest of this 360. So he'll make in total in 10 years 544,000.
So what would be the benefit of purchasing that if there's no cash flow?
I don't
Other
have to,
than,
yeah, I don't have to go to the bank, right? The seller is financing me. And then if let's just say I'm an investor, if I go to the bank right now, they're gonna finance me 400,000. They're gonna want me to put 20% down. So for me to get into the deal with about 12% down, because 10% down to the seller, and then let's just say I pay for closing costs and commission, I'll be about all in 12 to 13%, right? But that's a lot better than 20% in a traditional route, right? And then the bank is not going to give me 4%. I don't think we're going to see 4% interest rate in a long time. So if we could structure this where I get a 4% interest only payment, that means that I could break even on this deal. Because if somebody's going to try to go buy this on market right now, here's their payment. Their payment is going to be 2684 with the current interest rate. Right?
Oh.
So why is this a good deal? It's a good deal because the seller is I can negotiate a better deal with the seller. So rather than me going the traditional route, having to get a 7% interest rate and paying 26 a month and losing $1,000 a month, I could structure a deal like this where it makes sense with both of us.
Got it. I got it now.